Hi guys, welcome to Informed Investing. My name is Don Lawrence. I'm CEO of STA Research and our platform is StockTargetAdvisor.com. I'm a financial analyst and trader, and every once in a while we answer viewers' questions on stocks, the markets, and today we're looking at, we've got a question on Riot Blockchain, and the question is, what option do I like expiring in December? With an out-of-the-money option. So there's a few different ways to look at this here. First of all, I want to talk about Riot Blockchain. So the range here, 52-week highs and lows. We have the high at 46 and the low at $4.02 to be exact. So the question is kind of, where the stock's going to go in the interim. So obviously, excuse me, we're dealing with a number of factors here. We're dealing with the sort of crypto sort of sector, and then we're also dealing with the market at large, and then obviously if you want to throw on the rising rates environment and then how it impacts those two, because they impact both of those. So first of all, this is a very speculative option here. So, straight up, this is a very speculative play, and actually one I think is very interesting. I like Riot Blockchain, and I think it's a very interesting play here. We've got a nice range to play with here. So, looking at it, I think. If we get, so let's go to the interest rates. If we sort of get kind of and I think we're going to get the Fed banks taking a bit of pause of that. Too much gas on the pedal there. I think we're just going to sink everything. So I think that's going to ease up a little bit, and I think it's going to make sort of help the market so steady a little bit, and it's also might give a little bit of lift to crypto stocks. So that's sort of the positive side of things. So I think we should see that, and if we see that type of thing happening on that front, I definitely think we could see sort of Riot sort of charge through about $20 or so. Long shot, but I think it's a possibility. So if you want to be very speculative, you could take a $12 call expiring December 16th, and right now they're sort of asking around 52 cents. So that's a bit of a long play there, and of course you would likely expect to lose that money. So it's a bit of a lottery ticket, but when we're taking large out of the money options like that, that's what you expect. The other thing you could do is you could go a $5 call, which is just outside the money, and it's $1.69 again, expiring December 16th. So that's a little bit more attainable. Obviously, you've got more capital up front, but more likely to succeed. I tell you, the one thing I like the best is, and I keep talking about it on this channel, is I'm a big proponent of hedging. And so looking at this is a perfect stock to do a straddle on and an option. So what I would do is, because I think we're going to have, basically we've got till December there, middle of December, so we got quite a big time frame for this stock to move. So on a straddle, you're going to suffer on that straddle if the stock price doesn't move significantly, and I think it's going to move significantly here. So that's kind of what I'm betting on. So what I would do is I would go, my favorite here is again the straddle. So I would go a December 16th call at a $6 calls. They're currently asking 137 just now, and then what I do is I do a December 16th put, and I do that at a $4 strike price there for the put. They're asking is 126. So for just over 250, you got yourself a nice 250 premium. You got yourself a nice action there to move upside and downside. So you sort of break even. That's your break even price. So you need that stock to move in the money, that amount to break even. And I think it's certainly doable. I think, obviously if there's more downside, that's where you come into a bit of trouble. Sort of the puts there to sort of protect you a bit on the downside, unless it goes under $1 or something like that, which is possible because back in March 2020, the stock went down to I think it was 72 cents. So it's possible, and you still can make money on that. But I think the downside, is more limited than the upside. And I think where you hope to make the money is on the upside here. But that sort of put there is just to protect on the downside, and you might and to sort of hedge, and to sort of, if you're wrong, if we are wrong, and there's no upside on that, that sort of that put option is to protect us a bit on that downside. So guys, this is kind of what we do here at STA Research. We help, we inform, you have questions, we'll answer them best we can. Again, these are all our opinions based on our experience, and technical analysis, and various tools that we use to sort of assess the stocks, options, and the markets alike. So if you have any questions like this on a stock, on the market, please feel free to hit us up in the comments section, or email us at men@stocktargetadvisor.com. We'd be happy to answer your question or discuss a topic that you're interested in. And as always, thanks for checking us out. And if you're looking for more research information, please check our platform, stocktargetadvisor.com. And have yourselves a good rest of your day. Appreciate you checking in. Cheers, guys.